Hello friends, starting with one more strategy that is called strip. So far we have studied straddle, strangle, both these strategies. Now today we are studying modified version of straddle, not strangle, straddle. In straddle, if you can remember, we had two types, long straddle, short straddle, wherein we were buying call option, put option, or we were selling call option, selling put option of the same strike price, same expiry. Now, this is definitely a modified version. How it is modified and what do we do here? Let's understand. Strip is a modified strategy. So, the strategy that we are going to study, strip is a modified strategy, is more bearish version of common straddle. It involves buying number of at the money calls and twice the number of puts. So if you can recollect, in straddle, we were anticipating something big to happen, but we were not aware about the direction. So we bought one call option, one put option. Here we are more bearish than bullish. So that has been the reason. See, something big is going to happen, that is still there in our head, but we are more bearish than bullish. So that has been the reason we are actually getting into two puts and one call. That's the only difference. When to use? Strips are unlimited profit, limited risk options trading strategies that are used when the option trader thinks that the underlying stock price will experience significant volatility. That is once again the same rationale as we had in straddle in the near term, and more likely to plunge downwards instead of rallying. So it's more bearish, as I said, right? Now we've got the same similar kind of data, and most of the things I have calculated for you. So we save time in this video. All right. So we've got Nifty, which is trading right now at 4,500. The trader executes a strip by buying two puts and one call. The premium on put option is 23 per put and call is 43 per call. So the total premium that we would pay is 89. That is intuitive, that 23 into 2 and 43 into 1. 89 is the total premium paid. And as we usually do, on the expiration day. Of course, these strategies don't run longer. It don't run longer. Of course, the trader gets into this strategy once the opportunity is grabbed, he moves out of it, or else if opportunity is not likely to be grabbed, then also he moves out. But it doesn't hold up to maturity. But yes, we are learning more from academic angle. So if the prices on the final day, expiry day, happens to be something like this, then what are going to be the profit and loss? Now you can see at put side, had it been normal straddle, so one call and one put, then what would have been here? This is presented right now. This is essentially related to which one? This straddle. I'll just mention this. Because I had to differentiate both for you. So this is the straddle. Now, if I draw for the strip, how would it change? At call side, it won't change, but there will be some changes at put side. Now, look at this. How many puts do we have? Two. You can just go back in the video and check what was there for straddle. Now put into two. Okay. Now it's not straddle, it is strip. So per put, there is a profit of our strike price is 43. So 300 into 2, 200 into 2, then 100 into 2. Right? So 600 minus 89 is 511. 400 into 89, 311. 200 minus 89, that is 111. And now something very interesting, if I do 24211, you won't get the break even point. You have to identify a break even point that is somewhere between 4200 and 4300. So definitely this is not our break even point. So the interested students can definitely let me know. I'll confirm. Yeah, and this is what is required in CWM exams, that you are also supposed to find out the break even point. I can guide you because we are having two options. So total premium that I do have to recover is 89. 89 from two puts. That means the fall in price should be how much? 44.5. This is the hint you can take from my side, and you will let me know what is the price at which you would be finding out the first break even point. Call side, there is only one call, so the break even point is pretty easy to find out, 4389. Right, maximum profit potential is unlimited, loss is also limited here because that is to the extent of premium. Okay, now if I have to draw the chart, that is very interesting and that excites most of the students who are studying with us. If I draw this straddle, it is going to be V like this. Doesn't look like, I'll just correct it once again. So it is going to be simply the V. But if I'm uh, going ahead with which one? Strip. And that too, I've got two puts. I'm more bearish. Then at a lower side, it would be much steeper, right? So this is how it would look like. This is the strip. So the two break-even points. This is one you are going to find out for us. Maximum profit is unlimited, and loss is going to be to the extent of premium. That is 89. That's how we can conclude this strip. Now there is one more strategy in connection. I'm showing you the the table for it. Of course, we are not solving it right now. This is, you can take it as your homework as such. Now, strap is more bullish version of a straddle than bearish. So the trader gets into how many call options? Two call options. Rest of the data almost have been kept same, but here the premium amount would definitely change. Now, what's going to be the change in the premium? So you are having 23 into 1 and 43 into 2. So that is going to be your premium. Rest everything remains the same. So some more answers you will let us know. This break even point number 1, break even point number 2. Maximum profit is definitely known to us, that's unlimited, and maximum loss is to the extent of premium. If I draw the chart of it, if this is once again my typical straddle, then what happens, in this one, it will be steeper this side, as simple as that. So mathematically, you can go ahead and solve rest of the things. You have got the question with you, the table with you. You can pause the video and definitely look at it. In the next session, we'll have a couple of more strategies, and then we'll study butterfly and conclude the strategies as a series. Like, of course, I've taken a long time to conclude, but yes, now this time I really try to complete it really very fast. That's it for the day. See you in the next video. Bye, everybody.